as a property investor, you do not ever have to pay income tax on condition that you've got the skills and the competency and that you know what to do. So what I'd like to do in this video is to share with you one of the techniques that I'm using and my students, and that is called the enrolling strategy, and how that can benefit you on condition that you are a property investor. So if you're new to this channel, I'm Dreyer. I'm the founder of the Wealth Creators Method and University, basically where we help entrepreneurs and investors to create, to grow, and to protect their wealth. And one of the best ways that I know of, and I started with this in 1987, is property. There's no other investment like property on condition that you understand it, on condition that you know how to use all the variables that are available to you in order to stack this up, in order to get a phenomenal growth on your investment. So let's have a look at the enrolling strategy. I'm going to give you an overview of that. I'd like to show you the positives as well as the negatives, so that you can make an informed decision if this is something that you can apply, or maybe if you're not in a position to apply, to work towards that so that you can apply. So first of all, property is a long-term investment. It is not a short-term. It's not a way to make money. I do not speculate. I do not buy and sell properties or get into developments and that stuff. I see it as a long-term. Secondly, property takes responsibility. You are going to be the master of your own destiny. Property is not for everyone. That is, I think, what I'm trying to tell you. But if you're a person that is prepared to take the responsibility, then I don't see any other investments that can compare with property. Now, this technique that I'm going to show you is called the enrolling strategy, but it's only going to work once you've got a property that's going to give you a surplus. In other words, the surplus is if you take all the income that you're getting from that property or that property portfolio, minus all the expenses, and one of the biggest expenses that you can deduct is the bond interest portion of the bond that you're paying. So the banks will automatically, they'll give you a little certificate saying this is the size of the bond, this is how much capital you've paid, this is how much interest you've paid. The interest portion, if that is to generate income, that interest portion is tax deductible. And with most properties, especially in the beginning, that's going to be the bulk of the deductions that you legally can make. So the way that it works is you sit, let's say, with 10,000 Rand per month a surplus after all these normal deductions have been made, and you are sitting in a trust that is 45% marginal rate, or in your personal name, you at a 45%. Now, what does this marginal rate mean? It simply means that if you get that income, then SARS is going to take 45% of that. And remember, all the deductions are done already. That means it's going to leave you with less money to invest. And I'm going to make the assumption that you want to retire in 10 years' time from now on, and that you want at least 30 million to be able to retire within this portfolio. Now, remember, another thing that I see my students sometimes do not get initially is that it's got nothing to do with the value of the property, because we built a property portfolio. There's going to be more and more. So the enrolling strategy is one of the techniques that we use in order to create this end result that we want. But we want to get the end result tax-free. So how do we go about in doing that? In order to be able to do it, I need to go to an Excel spreadsheet to demonstrate this to you. Let's take the first example, and the first example is simply this one. You're getting 10,000 Rand per month from your portfolio at this point in time. Your tax rate, maybe it's in a trust, or maybe it's in your maximum marginal rate at 45%, which means out of that 10,000, 4,500 Rand will go to SARS, or the tax man. That leaves you with 5,500 Rand. Now, what can you do with that money? That is the question that I think is very important to answer. You see, where do you go with that? Because you want that money to grow for you so that you can build up enough capital in 10 years' time in order to be able to be financially free. So one way, and perhaps one of the securest way to use that money, is to start paying back your bond on condition that you've still got bonds. So if you do that, you're going to get at the current rate, let's say it's 12%. Your money is working at 12%. But the way that it works, it's lowering your outstanding capital. This simply means that there's actually less interest on the bond that you can deduct, which means you're going to pay more and more tax. Now, if you invest that at 12% back into the bond, what will your excess bond be then in 10 years' time? Because this is a growth on your investment. It's going to be 5,500 at 12% over 10 years is going to be a net value of 1.2 million. I've just used a future value. You can see the little formula over there, and you can build this yourself. This is the amount of money that you're going to have, 1.2 million. But 1.2 million additional, if you need, let's say, 30 million, it's not going to move the needle. It's not going to make a difference. So what do? We use the roll-in strategy. So what is the roll-in strategy? Let me quickly explain. I deliberately buy a new property that is going to cost me 10,000 Rand per month. In other words, there's a net loss of 10,000. But in property, that amount of money can be converted in growth. There's a way that we calculate it with the Property Pro Investment program. And if that can give me a 55%, now we have to take into consideration this is on your property portfolio. In other words, you increase your portfolio, and you need to get that growth in that portfolio of 55%. Otherwise, none of this is going to work. So that is a separate skill set that you need to have in order to be able to do it. But in 10 years' time, normal calculation, Excel, is going to give you 47 million rands on condition that you can grow 10,000 at 55% for 10 years. There will be 47 million. Now, there's a lot of reasons why the majority of people will not be able to do it. The moment that they see there's money, they're going to start using that money. I assume that you've got the responsibility and that you are prepared to take the responsibility, that you will keep on gaining the skills in order to keep on with this roll-in strategy and to have the necessary skills and competencies in order to be able to do it. Now, what's the difference between these two, let's call it strategies? It is a 45 million. That is the difference between following the roll-in strategy, where you do not have to pay tax, well, on condition that you structure it correctly. Now, another thing that I've seen over the years is that the moment that there's a surplus, you will get very quickly into a situation where you say, yeah, but I need this for this, or I can take a little bit more capital out of that additional money that we've paid. By the way, property is actually a mind game. It's easy to follow this that I'm giving you. That's easy. To do it in real life, that is where the mental part comes in. And that is where people make the mistakes. It's got nothing to do with the, let's call it the technical execution of this. It's always got to do, and I've seen with every single student that starts with me, every time we first need to work on the mindsets. If the mindsets are not right, people will not stick to that plan. And that's why I place so much emphasis on the mindset portion. Now, let's quickly have a look at what are the disadvantages of this whole thing. The majority of people, when they start, that property is going to cost them money, and is going to cost them money for at least 7 to 10 years where they have to pay into that property. Now, this example that I gave you is where the property is giving you positive cash flow. So this example is not applicable if you start off and that property is costing you money. So why do I give this to you? For the simple fact that if you know what is available, you're going to get the skills to change your portfolio, hopefully, so that you can get in a positive, because a lot of people say, but I don't want to pay income tax. And now I'm giving you a legal strategy that you can use to see how to grow, but you have to grow your portfolio. Otherwise, you will not get that benefit and not pay any cent income tax. And by the way, it's not only in terms of income tax. You never have to pay, if you've got the right structures and you've got the right competencies, you never have to pay any form of tax on your property portfolio and live off that, by the way. Now, these are more advanced strategies. I'm not going to share that with you. My students know of them. The negative thing is most of the time it's going to take time to do it. The next thing that can be a negative, if you get to the point where you now want to be financially free, where are you going to get the income from? Well, what I've done was to sell one of the properties that I had at that point in time. Now, this was a long, long time ago. I sold that property. I used that property, pay off just enough so that I could get the amount of income that I needed. And this is the beauty. But on that income, I'm going to pay income tax, right? But now the beauty is I can just draw enough income, the minimum amount of income, and keep on rolling the rest back into the portfolio to grow it, because bad things do happen. And one of the worst things that can happen to us is something called inflation. So although you do not have to pay income tax, inflation is a form of tax, and therefore you have to make provision for that. So I hope that this helped you a little bit. If you are serious about property investments, I've got a Property Accelerator Masterclass. I'm going to leave a link down below. Click on that, book your seat. It's going to be 2 hours. There is a question and answer session, so you can ask me anything, and I'm going to share 4, let's call it secrets, with you. Because once you know it, it's not going to be a secret. And that is not only in terms of your property portfolio, but how to apply the wealth creator strategy. And the wealth creator strategy is the intelligent use of limited resources to go from where you are to where you want to be in the shortest possible time with the least amount of risk. And we're going to focus on the risk. And risk is when you do not know what you're doing. In other words, you don't understand what it is that you let yourself in. Property's got 27 variables, but these variables are actually 27 risks. So the moment that I know how to identify the risk, then the next question is, how do I offset that risk? It's very simple. I need to have the competency or the skill. So skills, I value skills, offset the risk. And therefore, in property, by taking the responsibility, I can eliminate the risk. And this is what makes property investment so beautiful, is that I've got full control, but there's a condition. I must have the competency. I must understand how it works and what are these variables, how to identify them, and then how to mitigate them in the event that they happen. For example, what happens if the tenant doesn't pay? Or what happens if the interest rate goes up with 5 or 10%? And this has happened to me on several occasions, the interest rate here in South Africa. But if you're not prepared for that, it can cost you everything that you've worked for. And for that reason, I suggest that you find the link and make sure that you attend the Property Accelerator Masterclass. But I'm going to add another bonus, except for the fact that I'm going to share with you and give you the opportunity to ask me questions. I'm also going to explain this strategy and show you how I'm using this strategy at the moment to mitigate my risk down to just 100 Rand. And I'm busy building a portfolio by applying the roll-in strategy to at least 10 million. I've got another, 3 years left to be able to do it. We've changed the 100 so far into 4 million, but over the next 3 years, I think that we'll be able to get to the 10 million. And I'll give that to you on condition that you pitch up. So if you are serious and you'd like to know how to do it, and you want to find out a lot more about being a property investor, make sure that you attend. Also, if you found this valuable, I would appreciate a like. That's going to help me and the channel to spread this to more and more people. If you're not subscribed, please make sure to subscribe, because there's more of this information, and there's a ton of information available already that can help you and benefit you, especially if you're serious and you want to take the responsibility and you want to make an informed decision when it comes not only to build this portfolio. Maybe you've got property already, but that property is not working for you, so that you can see what I suggest that you do in the event like that. So thank you so much for your time, and then I'm going to see you in the next one.